Hello everyone, this is Dr. K. Jagannayaki, Professor in MBA Department, Institute of Aeronautical Engineering, Hyderabad. Today I would like to discuss with you about joint stock company and cooperative societies. So after going through this topic, the learner will be able to understand the incorporation of joint stock company, what are the features, merits, demerits of joint stock company, features of cooperative societies and different types of cooperatives, merits and demerits of cooperative society and business and new economic environment. So let us start with joint stock company. The word company is derived from Latin word. It is derived by two words, one is come, another one is penny. So come means come together and penny means bread. So that's how joint stock company means people come together to earn their livelihood by investing in the stock of company jointly. So that is the reason it is known as joint stock company. So according to Lord Justice Lindley, he explained the concept of joint stock company, form of organization, as an association of many persons who contribute money and money's worth to a common stock and employ it for a common purpose. So the ultimate purpose of the company is to earn more profit maximization. So as a result, different people, they used to invest their money in the form of stock. Coming to the joint stock company, it is a business owned collectively by its shareholders. So in case of joint stock company, so all the investors, they used to invest in the form of shareholders. So it is a business which is owned by its investors, with each investor owning a share based on the amount of stock purchased. The total capital divided into small pieces and each piece is known as a share. So joint stock companies are created in order to finance the endeavors that too expensive for an individual or even for a government to fund in that companies. So the owners of a joint stock company expect to share in its profits. So as a result, they used to issue shares among the general public, and the public, they used to buy these shares, and that's how they used to acquire the ownership. Coming to the features of joint stock company, joint stock company's first feature is artificial person. So in the eyes of law, according to 1956 Companies Act, the company can be treated as an artificial person. It's a separate legal entity, voluntary association of persons. It is perpetual in nature. So coming to separate legal entity, so whenever you are taking, the company is different, the owners are different. There is no relationship between the company and the owners. So it is always treated in the eyes of law as a separate legal entity. Then third feature is voluntary association of persons. So people out of their mutual interest all come together jointly to invest in the stock of a company. So that's how it becomes voluntary association of persons. It is perpetual. So company, either the men will be there or not, it will run forever. So it's a continuous process. So it is perpetual in nature. Next feature is number of members. So we can decide the number of members in both aspects. One is in case of public limited company, another one is private limited company. If it is public limited company, at least there should be 7 members, and for the maximum there is no limit. But whereas coming to private limited corporations, the minimum should be 2 and maximum should not exceed more than 10. The next one is limited liability. So liability means the responsibility or the obligation to each and every stock shareholder. They will have minimum because these shares are acquired by paying some amount in the form of premium. As a result, people will acquire the ownership on the stock. As a result, the liability will be very limited comparatively with partnership firm and sole proprietorship firm. Then transferable share. So by issuing the shares, by way of purchasing the shares, the investors they used to get the ownership. So the ownership can be easily transferable in case of a joint stock company. Then incorporation. So for sole tradership, already we have gone through that sole tradership. There is no such any kind of legal formalities to establish a sole tradership. Even partnership firm also it will be nominal and that should be registered under Partnership Act 1932. Whereas coming to joint stock company, it has to fulfill the formalities. So it is not easy to form a joint stock company. So it must and should register under 1956 Companies Act. And capital is divided into shares as people voluntarily associate with each other and like how they used to invest. So pooling of all these funds further divided into small parts and each part is known as share. So the joint stock companies they used to raise funds from the general public by issuing shares and common sale. So as company is an artificial person, it cannot sign. So instead of its signature, company will have a sale. So that sale is considered as the sign of the company. So it is known as common sale. Then coming to the types of joint stock company, there are different types of joint stock company like chartered companies, registered company, statutory company, limited by promise, limited by share, public limited and private limited. So chartered company means a firm incorporated by the king or the head of the state which is known as a chartered company. For example, East India Company, it comes under chartered company. The next one is statutory company which is formed by a particular act of parliament is known as statutory company. So all the powers, object, right, responsibilities, everything defined by the act. So example for that ONGC and registered company, an organization that is formed by registering under the law of companies comes under a registered company. So whichever company registered under Companies Act 1956, all the companies are known as registered company. So Google, Yahoo and Coca-Cola, McDonald's, Facebook, these are all comes under registered companies. Then oil examples of this joint stock company, if you take examples of Indian Oil Corporation Limited, Tata Motors Limited, Reliance, State Bank of India, these are all comes under joint stock company. So these companies listed in the stock market, so through which even by issuing the shares, the companies raised the minimum subscription from the ordinary people. Then comes to the formation of a joint stock company. So there are two stages in the formation of a joint stock company. The first stage is to obtain the certificate of incorporation. The second one is to obtain certificate of commencement of business. So the first one is certificate of incorporation. So this is somewhat like our birth certificate. So it certifies that a company with such and such a name is born on a particular day. So that should be find out with the help of certificate of incorporation. Then next certificate is certificate of commencement of business. So this is especially when for private companies need not obtain the certificate of commencement of business, but in case of the government companies, they have to compulsory gone through this type of commencement of business. It can start its commercial operations immediately after obtaining the certificate of incorporation. So persons who conceive the idea of starting a company and who organize the necessary initial resources are known as promoters. So The promoters always they treat themselves as the backbone of the company in the future to reckon with. So as a result, it is necessary to get the certificate of commencement of business. So promoters have to file the following documents along with necessary fee with a register of joint stock companies to obtain the certificate of incorporation. So the first one is memorandum of association. So memorandum of association is also called as the charter of the company. So it outlines the relations of the company with the outsiders. So it furnishes all the details of clause such as name clause, situation clause, objects clause, then capital clause, subscription clause duly executed by all its subscribers. So name clause it includes the name of the company and who are the promoters so that their details where exactly you are trying to establish your plant, that also comes under situation clause, what kind of objectives you have for the establishment of a joint stock company and how much capital was included in the functioning of the joint stock company. So everything it should be furnished in the memorandum of association. The next one is articles of association. So articles of association furnishes the bylaws or internal rules government the internal conduct of the company. If you want to run the business smoothly, so every company they will have their own articles of association where they used to prescribe some kind of bylaws and the list of names and addresses of the proposed directors and their willingness in writing to act such in case of registration of public company. So complete details of the proposed directors and their acceptance, everything will be under in articles of association. A statutory declaration that all the legal requirements have been fulfilled. So the declaration has to be duly signed by any one of the following. So this kind of declaration should be either signed by company secretary in whole practice or the proposed directors may sign, a legal solicitor, a chartered accountant in whole time practice or advocate of high court. So these people are the authorized persons who can have the right to sign on articles of association. Then coming to the joint advantages of joint stock company, mobilization of larger funds. So if you compare sole tradership, partnership and joint stock company. So in case of sole tradership, the sole trader will have limited resources. So it is not that much easy to mobilize those funds. Whereas coming to partnership firms, comparatively from sole trader, it is a next level version where we can have some kind of increase in case of the resources. But whereas as in case of joint stock company, there is no limit for the numbers who can able to join the joint stock company. So as a result, the pooling of funds will be very high and that funds whatever they rise in the form of the minimum subscription from the general public by issuing the shares, those funds can be easily mobilized from the surplus units to the deficit units. And second one is separate legal entity. So in the eyes of law, company is different and the promoters are different. So company always we used to treat an artificial person. As a result, we also consider their joint stock company as a separate legal entity. So its liability is limited as it is a separate legal entity. Its liability is limited and transferability of shares. We can transfer the shares of joint stock company very easily from one person to another person. And liquidity of investments. So wherever you are going to invest in the joint stock company, those shares can be easily convertible into cash. So that is known as liquidity of investments. So it inculcates the habit of saving and investments. So people also have improve the habit of savings and they can also maximize their investments. As a result, they can have less risk as well as maximum returns they can able to generate by investing in joint stock company. Then institutional confidence. So as there will be large number of people involved in the joint stock company, the confidence also we can build. When you are going to compare with individual confidence with that of a group of people's confidence. Then professional management. So as the operations of joint stock company are very high in number, as a result, some cases they need to have the support of professionals who will have the relevant skills and they can able to develop the organization further. Then growth and expansion. So comparatively, sole trader and partnership, joint stock company will have more growth and they will also have scope for expansion. Either they want to diversify or if they want to expand, that can be possible only in joint stock company. Then apart from these advantages, it has some disadvantages also. The first one is formation of company is a long run process because to get approval from the register of companies, it's a long process. It takes a lot of time and expensive also. So for that reason, from the certificate of incorporation to to get the certificate of commencement of business, it takes large gap between these two processes. Then high degree of government interference. So in case of joint stock company, government interference will be more. Inordinate delays in decision making. So if you see the organization structure, there will be different levels of managers, and as a result, the communication should always flow from top to bottom level. So it needs some time. So as a result, there will be a lot of delays in case of making decisions and lack of initiative. So people, most of the cases, as there will be maximum number of people who are going to involve in the joint stock companies activities. So either due to lack of skills or people may not take initiation. So that also one of the disadvantage. They want to throw the work on others' head. So that is one major disadvantage with joint stock company, and also lack of responsibility and commitment. So people they never feel that they are responsible and they have to do their work committedly. So that type of things lagging in case of joint stock companies. The next type of business organization is cooperative society. So cooperative society is a voluntary association of people or businesses to achieve an economic goal with a social perspective. So its aim is to serve the interest of the poorer sections of the society through the principle of self-help and mutual help. So these are all voluntary association. So they used to form with a purpose to help others. So it depends on the notion self-help and mutual help. So the main objective is to provide support to the members. So nobody joins a cooperative society to earn profit. So it is not profit oriented organization. So people come forward as a group and pool their individual resources and utilize them in the best possible manner so that they can derive some common benefits out of it. So one single person is not going to gain the benefit, but all the members of the society they can enjoy the benefits. Then a cooperative society can be formed as per the provisions of the Cooperative Societies Act 1912. At least 10% above of 18 years having capacity to enter into a contract with a common economic objectives. Like all farmers, they used to join together and form an cooperative society. Weavers association will be there. All the weavers come together and for their mutual benefit they used to form as weavers association. Consumers, they will have one association, consumer forums like that. So people out of their mutual benefits, they used to form a cooperative society. If the object of the society is creation of funds to be lent its members, all the members must be residing in the same town. So if anyone they want to avail the financial benefits from the society, some constraints will be there to the society, and they made some rules as mandatory that or the person whoever want to avail that kind of funds from the society, they must ensure reside in the same town or village or group of villages, or all members should be of same tribe, same class, same caste or occupation, unless register otherwise directs. So coming to the number of people eligible to form like an association. So the provision of minimum 10 members are residing in the same town or village, etc. is not applicable if a registered society is member of another society. So the statement of objects and reasons states as follows. Cooperative society can be established for purpose of credit, production or distribution. For example, if you take agricultural credit societies, so must be with unlimited liability. Unlimited society is not best form of cooperation for agricultural commodities. So unlimited society can distribute profits with permission of state government. So to avoid delaries, so they used to form like farmers association kind of thing. The last word in the name of society should be limited. So if the society is registered with limited liability, if a society has limited liability, any individual member of such society cannot have share capital more than 1/5 of the total capital. So an individual member cannot have interest in shares exceeding 1000 rupees, and this restriction of 20% shares or 1000 share value is not applicable to a registered society which is a member of another society. So if a registered society is member of another society, it can hold shares exceeding 20% or exceeding 1000 in value. So in case there is no registration, then in this type of rule is not applicable to unregistered societies. Then a registered cooperative societies can hold property, enter into contracts, institute and defend suit and other legal proceedings to do all things necessary for the purpose of its constitution. So like joint stock company, even the cooperative society also have the registration process. A registered society can give loans only to its members. However, it can give loan to another registered society with the permission of the registrar. If you want to provide loans to other society people, then definitely they have to get permission from the registrar. So a society with unlimited liability cannot lend money on security of movable property without sanction of registrar. So whatever they want to do, they want to mobilize the property or some other things, it is mandatory that they should get permission from the registrar. State government by issuing a general or special order can prohibit or restrict lending of money on mortgage of immovable property by any registered society or class of registered society. So based on the state government norms only they used to respond. Then coming to the different types of cooperative societies, the first one is consumers cooperative society. So these societies are formed to protect the interest of general consumers by making consumer goods available at reasonable prices. So that is the reason if you observe that wherever some issues related to the price or some other thing, people immediately know, opt for consumer forums like that, so that they can easily resolve their problem. They buy goods directly from the producers or manufacturers and thereby eliminate the middlemen in the process of distribution. So examples of this kind of consumer cooperatives are Kendriya Bandar, Apna Bazar, Sahakari Bandar, examples of consumers cooperative societies. Then producers cooperative society. Like consumers, even producers will also form their own society. So these societies are formed to protect the interest of small producers by making available items of their need. So here, if you take examples of by introducing like raw materials and equipment, machinery, so these they are going to utilize to protect the interest of the people. And if you take examples of handloom societies like APCO, Bayanika, Haryana Handloom, these are some of the examples of producers cooperative society. Then next one is cooperative marketing society. So the role of these societies are uh, providing or facilitating the services so that even the manufacturers, they may not find it difficult to sell their products individually. So on behalf of these manufacturers, the society collects the products from the individual members and takes the responsibility of selling those products in the market. To take example of Gujarat Cooperative Milk Marketing Federation that sells Amul milk products is an example of marketing cooperative society. So cooperative credit society is another one. These societies are formed to provide financial support to their members. The society accepts deposits from members and grants them loans at reasonable rates of interest in most of the times whenever they are in need. So village service cooperative society and urban service or cooperative banks are examples of cooperative credit society. So these societies, they will provide financial assistance to their members. The next, cooperative farming society. So these societies are formed by small farmers to work jointly and therefore enjoy the benefits of large scale farming. Lift irrigation cooperative societies and Pani panchayats are some of the examples of cooperative farming society. Next one is housing cooperative society. So these societies are formed to provide residential houses to their members. So they purchase land, develop it, construct houses or flats and allot the same to their members. So some societies are provide loans at a lower rate of interest to the members to construct their own houses. Then the employees housing societies, metropolitan housing, cooperative societies are examples of housing cooperative society. Apart from the commodities, even these societies also provide housing loans and that support to their members. Then what are the characteristics of cooperative societies? The first one is open membership. So the membership of a cooperative society is open to all those who have a common interest. So a minimum of 10 members are required to form a cooperative society. The Societies Act do not specify the maximum number of members for any cooperative society. So after the formation of the society, the member may specify the number of members. So it depends on the individual society. The next, voluntary association. So members join the cooperative society voluntarily. They do not have any choice. So member can join out of his own interest as and when he likes, continue for as long as he likes and leave the society at all. So state control is another characteristic to protect the interest of members. Cooperative societies are held and placed under state control registration. So while getting registered, the society has to submit details about the members of its business which is to be undertaken. So it has to maintain the books of accounts which are to be audited by the government. Then sources of finance. See, cooperative societies contributed by all members so they can easily raise loans and secure grants from government after its registration. Then comes service motive. So the main objective of cooperative societies is not profit maximization, but they want to help each other. So they used to provide some kind of services exclusively for their members. For example, in a consumer cooperative store, goods are sold to its members at a reasonable price by retaining a small margin of profit. It also provides better quality goods to its members and the general public. Then next one is separate legal entity. So a cooperative society is registered under Cooperative Societies Act. After registration, a society becomes a separate legal entity with a limited liability of its members, death, insolvency, or lunacy of a member. It does not affect the existence of a society. So it can enter into agreements with others and can purchase or sell properties in his own name. Then coming to the advantages of cooperative society. So it is easy formation. Formation of a cooperative society, it is very easy comparatively joint stock company. So any 10 adults can voluntarily form an association and get it registered with the Register of Cooperative Societies. The next one is open membership. So persons having common interest can form a cooperative society. Any competent person can become a member of cooperative society. Whenever he wants, he can enter, and if he don't want, he can exit. So that kind of membership we can seek only in case of cooperative society. The next one is domestic control. So democratic control. So a cooperative society is controlled by the top level management in a democratic manner. So the members cast their vote to elect their representatives to form a committee that looks after the day-to-day administration. So complete control will be in the hands of the elected representatives of the committee. So this committee is accountable to all the members of the society. Then limited liability. The liability of members of cooperative society is limited to the extent of capital contributed by them. So if a person invested 10,000 rupees, up to that extent he will have liability. Another person he invested 1 lakh. So comparatively his liability is more than the previous one. So unlike sole proprietors and partners, personal properties of the members are free from any kind of risk because of business liabilities. The next one is elimination of middlemen's profit. Through cooperatives, the members of consumers, they control their own suppliers and thus middleman profit is eliminated. And state assistance, both central and state government provide all kinds of helps to the societies. Such help may be provided in the form of capital condition, loans at lower rate of interest, exemption in tax, subsidies in repayment of loans, etc. So that kind of assistance generally cooperative societies they seek from the government. The next one is stable life. A cooperative society has a fairly stable life and it continues to exist for a long period of time. Its existence is not affected by the death, insolvency, lunacy, or resignation of any of its members. The next one is business and economic environment. The economic environment of business it denotes external conditions and factors that impact operations, growth, and profitability of the business. It includes the overall state of economy, which includes economic policies, market conditions, and socio-culture influences. In simple terms, the economic environment sets the stage in which business operates. It includes things like government regulations, tax planning, interest rate, consumer spending habits, or consumer behavior towards a particular product and services, a competition in the market. All these factors can directly affect a company's ability to succeed. So coming to the elements of economic environment, we have lot of variables or elements in the economic environment. Economic policies, consumer behavior, market conditions, technological advancement, macroeconomic indicators, microeconomic indicators, global economic indicators. Then next, what factors that affect the economic environment of business? So already we have sufficient knowledge about the branches of economics, micro and macro. So these factors are essential for businesses to navigate environment effectively and make informed decisions. The next one is macroeconomic factors. So under macroeconomic factors, let us discuss government policies. So this includes fiscal policies like taxes and government spending and monetary policies which are controlled by central banks. Global events. These events are large scale such as internal trade agreements, geopolitical conflicts, global economies, crisis and can impact the overall business environment. The next factors affecting the economic behavior of a business. So under which we used to discuss about technology changes, natural disasters, currency exchange return and consumer confidence. So these are the key elements. So let us start with technology change. Technological advancements like automation, internet, artificial intelligence can transform entire industries and markets. Next, natural disasters. Large scale disasters like earthquake, hurricanes, pandemics, etc. can disrupt economies and affect multiple businesses. So currency exchange rates is also important and these changes in the company's currency can also have an adverse impact on spending habits and consecutively business performance. The next one is microeconomic factors. So where we used to analyze the conditions like market demand, supply and demand. Next one, competition. So market demand means it is a specific demand for business markets or services in a particular market, which can vary based on customers' preferences and trends. Then comes supply and demand. The balance between the availability of goods or services and the customer demand, which can affect the prices and business performance. Then comes competition. The number and strength of competitors in a specific industry or market, which influence pricing, market share, and profitability. Then other types of markets like labor market, consumer behavior, supply relationships, regulatory environment. Coming to labor market, the availability of skilled workers, their wage levels, and labor regulations in a particular area has its impact on business ability to hire and retain talented employees. Then comes consumer behavior. The purchasing pattern of consumers, they can also affect business sales and marketing strategies. Then suppliers relationship. The quality, reliability and cost of suppliers also have direct impact on business supply chain and production cost. Next comes regulatory environment. So under which we'll have local regulations and also whatever permits and licenses that are necessary to establish the business, and those affect the business operations and compliance with laws. Thank you.
Like, share and subscribe. Hit the bell icon for more updates.